What is your budget and financial plan for the initial stages of your business? Creating a budget and financial plan for the initial stages of your business is crucial for setting a solid foundation and managing resources effectively. Here's a guide to help you develop a comprehensive budget and financial plan. Startup costs. Identify one-time costs. List all one-time startup costs, including legal fees, registration, equipment, initial inventory, branding, and technology infrastructure. Estimate initial operational expenses. Project initial operating expenses such as rent, utilities, insurance, and any other costs necessary for day-to-day operations. Revenue projections. Market research. Conduct thorough market research to estimate potential revenue. Understand your target market, pricing strategies, and sales projections. Conservative estimates. Be conservative in your revenue projections to account for uncertainties and market fluctuations. Cash flow management. Cash flow forecast. Develop a cash flow forecast outlining expected inflows and outflows. This helps in understanding when cash will be available and when expenses need to be covered. Emergency fund. Set aside an emergency fund to handle unexpected expenses or delays in revenue generation. Financial statements. Income statements. Create an income statement projecting your revenue, costs of goods sold or COGS, and operating expenses. This provides a snapshot of your profitability. Balance sheet. Develop a balance sheet showing your assets, liabilities, and equity. These help assess your financial position. Funding sources. Identify funding needs. Determine if you'll need external funding, and if so, estimate the amount required. This could include personal savings, loans, grants, or investments. Exploring financial operations. Research and explore financial operations such as small business loans, angel investors, venture capital, or crowdfunding. Cost control and efficiency. Expense management. Implement cost control measures to efficiently manage expenses. Prioritize necessary expenditures and seek ways to reduce non-essential costs. Efficiency measures. Identify opportunities for operational efficiency, such as technology adoption or outsourcing certain functions. Budget categories. Fixed and variable expenses. Categorize expenses as fixed, unchanging, and variable, dependent on business activities. This distinction helps in planning and decision-making. Marketing and promotion. Allocate a budget for marketing and promotional activities. This includes online and offline marketing, advertising, and promotional materials. Legal and compliance. Legal fees. Budget for legal fees associated with business registration, contracts, and compliance. Ensure that your business adheres to all legal requirements. Personal costs. Employee salaries. If applicable, budget for employee salaries and benefits. Clearly define roles and responsibilities to determine staffing needs. Training and development. Allocate funds for employee training and development to enhance skills and productivity. Contingency planning. Contingency budget. Set aside a portion of your budget for unforeseen circumstances or changes in business conditions. A contingency budget provides flexibility. Technology and infrastructure. Technology investments. Budget for technology infrastructure, software, and tools required for business operations. Consider cloud services for scalability. Monitoring and review. Regular financial reviews. Schedule regular reviews of your financial statements and budget. Assess actual performance against projections and adjust the budget as needed. Tax planning, tax reserves. Plan for tax obligations by setting aside reserves. Consult with a tax professional to ensure compliance with tax regulations and optimize tax strategies. Long-term financial goals. Define long-term goals. Clearly define your long-term goals. This could include expansions, diversification, or achieving a specific level of profitability. Financial software. Use financial software. Utilize financial software or tools to streamline budgeting, invoicing, and financial tracking. This enhances accuracy and efficiency in financial management. Business insurance. Insurance costs. Include costs for business insurance to mitigate risks. This may include liability insurance, property insurance, or other types depending on your industry. Review and adjust regularly. Flexible budgeting. Understand that your initial budget may need adjustments based on actual performance and changing market conditions. Regularly review and adjust the budget as necessary. By carefully planning and managing your budget in the initial stages of your business, you set the foundation of financial stability and sustainable growth. Regular monitoring, adaptability, and proactive approach to financial management are key to navigating the challenges of the early business stages.